You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is Friday. It is time to talk some vol. Man, do we have some vol to talk about. Another wild week in the books and, of course, still unfolding as we're recording the show. My name, of course, Mark Longo from the Options Insider Radio Network, your home for all of your favorite options podcasts. Over a dozen coming at you these days. Yet another reason why, if you're just listening to Vol Views, man, we love you, but B, you're missing out on a whole heck of a lot of other content. And of course, if you want to check out the upcoming Vol Deathmatch 2.0 coming up really soon, listeners, as well as you want to hear that awesome panel I did just last week at the 100th anniversary of the Securities Traders of Chicago here with a great cast of characters. That's all up there on the Pro already. That's the only place you're going to get access to that. So check it out. theoptionsinsider.com/pro is the place to go as we got to get into action out here. First, joining me from the hinterlands of Chi-Town, or perhaps a lake in Indiana. We'll find out. None other than the once future and present Dr. VIX/V-Stocks. You wore both hats this week.
I did wear both hats this week, and you almost got a call from me last night.
Oh, did I?
I taught a class from 6 to 8:30, drove home, flipped on TV, and the TV still had Bloomberg on, and stuff was leaking out. About 9 p.m. Eastern last night. That's when the Warsh thing came out.
Oh.
And yeah, it was like, if VIX were open, I probably would have said, hey, let's get on there and talk about this, which ended up being very much of a non-event. The S&P overnight sold off like 1% or so, and then kind of worked its way back. But very exciting stuff happening outside of hours.
Yes.
So,
yes.
Interesting
stuff. Interesting stuff indeed. And also joining us to digest all of this interesting stuff, the greasiest of meatballs himself, Mr. Mark Sebastian from optionpit.com. Mr. Meatball, welcome back to the program, sir.
Good to be here. I'm having a much better day than gold futures and silver futures.
Yeah, gold and silver bulls. Yet another thing to add to the mix. So let's get to it, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get down to business. A little bit of the old Volatility Review. And man, we got a lot of stuff popping off here before the bell today in the after hours, as Mr. Dr. VIX alluded to, and again earlier this week. So a lot going on. As we're coming into the start of the show, we're seeing a lot of red on the screen yet again. S&P off nearly 0.75%. The Dow off almost 1%, about 0.9%. The NASDAQ off 0.99%, so effectively 1%. And VIX cash getting the old lift skyward. It was at about 1760 when we kicked off the show, up over one, about 1.7 points from where we were this time last week. Good old volley, the at the money, just the facts, man. Vol edition at about a 1440, up 1.15 points. And VVIX at a nice frothy 104. That's up 6 points. Let me just react that really quickly to see if we've gained any. Yeah, still about 104 out there, up about 6 points from where we were this time last week. Of course, a lot going on, as Mr. Dr. VIX alluded to after the bell and before the open. Last night we had Apple earnings. They seemed like they were pretty decent. Stock was up early, then they ended up giving a lot of that back just because it sounds like these ever increasing RAM prices and all the other component prices going to weigh on Apple just like they are everyone else. Have you tried to buy a memory stick or card lately? It's tripled in price just in the last few months out there. So yeah, that's hitting Apple like it is everybody else. So that's kind of weighing on them. Of course, in the off hours, we did have sounds like the selection of the Fed share. Markets apparently not liking that at all, which is kind of wild because I think everyone pretty much knew this was the guy for a while. He's been openly campaigning for it, saying, hey, we need lower rates, which is pretty much playing right into the administration's narrative, even though in the past this guy has been kind of a bit of an inflation hawk, so a bit of an about face, but hey, I guess you do what you got to do to get the job. Apparently the job is going to be his if he can get approved now. So markets, for whatever reason, even though the guy's saying he's going to cut rates, not liking that at all. So we're selling off on that as well. And as the Meatball alluded to, just metals apocalypse. Maybe the moment has come. Has the bubble finally burst? And we've been talking silver more on this network lately than we have probably in the last 19 plus years combined. We had Uncle Mike talking silver on Twifo yesterday. On Wednesday, on the futures rundown, a deep dive, a full report from the folks at Option Metrics about, of course, the vol, just what's been going on out there, the futures side of it. It was a deep dive. So if you want to have a deep dive into all things silver, again, yet another reason why you should be subscribed to the network. And then coming in today, we were just talking about how, you could have sold those 85 puts for nearly $5 last week, and they went out looking pretty good. Well, those 85 puts are back in play again. Silver hanging out right around that 85 handle, off a keen 25% today. So this is a market that's been up 5 to 8 to 10% a day ever since the year started, now giving a whole bunch of that back in one fell swoop. Even with that, even with today's move, it's still up 21% for the year. So we still have some green on the screen. But yeah, those 85 puts we were just talking about, suddenly back in play. I know a lot of our pro folks, a lot of people in general, I think we're starting to get lured to the dark side. I mean, the vol levels in SLV were just astronomical through the roof. Triple digit vol levels for silver. It's unheard of. So a lot of people, I think, were lured to the dark side of that. Some of those might be getting hoisted on their own petard this morning. So a lot going on out there in the markets. Let's go the other way. Let's go to the greasiest of meatballs first. Mr. Meatball, if you have recovered from the joy that was the Motu trailer last week, which apparently the entire internet is loving. It's just getting millions of views. So apparently Motu is back, which is another reason why vol is coming back up. Everyone's excited. But Mr. Meatball, sir, a wild week. What's catching your eye?
Yeah, I mean, we had a lot of news, a lot of earnings. We can talk about some of these themes, right? Silver has essentially repeated a GameStop move. It was the meme. It moved like a meme stock, and the fall of silver, which is normally somewhere around 18, shot to 110%. That's usually a sign that there are real disconnects in those markets. And gold, kind of similar. Not quite the move that silver made, but also meme. Clearly, people are being liquidated today because these stocks are, GLD, SLV, gold futures, whatever, physical.
Did you get lured to the dark side by any of that juice, sir?
When I saw that sell-off yesterday, I bought every put in gold miners that I could find that they would sell to me. And because one thing to realize, and I'm going to tell you guys a trade idea, and Russell, I'd love your opinion, but one thing to know is that when gold and silver catch a cold, the miners catch every single disease you could possibly catch from the Oregon Trail. They're getting dysentery. They're getting typhoid. They're getting malaria. They're getting bit by a rattlesnake.
The miners all died of dysentery on the trail.
Yeah, they're getting bit by a rattlesnake. It's that bad. So, as a pair, so when I saw them starting to kind of have that huge fluctuation yesterday, I said, I'm buying puts and miners. I wish I'd have been able to buy more. Is my only regret. Had puts in GDX, EQX. Was looking for some other opportunities. Wish I'd bought Silge, the silver junior miners. But that is kind of what I saw yesterday, and then today I'm unloading. So now what I'm planning to do today is I am going to be looking to potentially buy either gold or silver, and I'm going to hedge it with puts in the miners, knowing that they should, in theory, they will underperform on the upside. Not on theory, this is what they do. They underperform on the upside, and they outperform on the downside, almost unilaterally. So that is kind of the trade I'm trying to set up, if they'll let me.
And going back to broad vol for a second, what are your thoughts on our sell-off today? Apparently, the guy everyone thought was going to get the job, no bueno, sir.
Yeah, no, I think I think this has more to do with what's happening in the precious metals markets and earnings, which we can talk about here in a second, than it has to do with Warsh, although definitely the dollar, which had been just in free fall, seems to have found a bid. And, if you're wondering whether this is like some big cataclysmic event, we're not seeing a lot of wake up out of the VIX. Now, it was already almost 17 and had been over 20 on the lows on Thursday. But 18 when we had a 225-point range on Thursday, and we've had a decent range today, tells me that, this might work itself out pretty quickly.
Mr. Dr. Vic, same question for you, sir. What is catching your eye out there in these markets? And it's kind of hard to avoid the metals apocalypse. It's not quite the biggest sell-off in 50 years, but 46 years right now for silver. So historic event, sir. What's catching your eye?
One of the things with respect to silver that I heard a couple of people say, but I couldn't confirm, was apparently every time we've had one of these big run-ups in silver, we've had a 20% retracement in the S&P 500 within the next 6 months.
Oh,
that it's just been a canary in the coal mine for a market sell-off. The one in the 70s with the hunts was the first one. I found 5 of them, but I just couldn't make that come true with the numbers. But it probably is an indication that things are, very scary in the world right now. The only reason people would be loading up on silver and gold is if they're worried about the dollar, maintaining its status, or if you're thinking about fighting. And what's really interesting to me is I'll talk about this in graduate classes, and I'll even say, China's the group that seems to be loading up on gold as they've sold our treasuries and gearing up for a fight. And I get knowing nods from my Chinese students like, yeah, you're kind of right on that, which is pretty darn scary if you think about it. With respect to the Fed guy, I was on Fox Business this morning talking about it, so I did a lot of digging on him. I think he was the best choice. He actually was the number 2, according to Kalshi, when everything started to leak out last night, and then they flipped. But he had been the leading. Kevin Warsh was the leading guy for some time. He's worked on the street. He was an advisor for George W. Bush, and he was on the board of governors during the financial crisis. So he has good experience. The thing is, he's very much of a hawk, which is opposite of what Trump is. And, did he do like in Joe versus the volcano? Could he get the job, but he's not going to do the job that Trump thinks he's going to do? Did he say, oh, yeah, if you want me to cut, did he say the agreeable things? And then when he gets in that job where he really can't be removed.
Can you imagine if he rolls into office and then says, I'm not cutting rates? Can you imagine the outrage that's going to flow out of the White House on that?
The thing that I think he will do is one of the reasons that he resigned from the Fed about 15 years ago was he was unhappy with how much they got outside of that dual mandate. And that might be why the market doesn't like him as much, because, well, if he's only going to focus on the dual mandate, and he's even said that he doesn't think the Fed should be doing the stress tests on the banks. Somebody else should be doing it. That's not the Fed's job. So he may narrow their focus down. And if they do that, then he's not as market friendly. He might be really good for the economy, but he might not be as market friendly as Powell has been or as Trump would want him to be. So I think that's why we got that initial negative, and it was a very negative reaction last night. Happened right when I got home, and then we did nothing but fill that gap as the evening went along, in the S&Ps, and then sold back off. I can't find a date on this one, but it's going to be very interesting the first time Kevin Warsh is speaking in public as the nominee now. I wish he had a presentation scheduled next Wednesday or something so we could get some insight from him. But I think he may be considered slightly negative for the markets because he's much more of a traditionalist and I just made up that term. I don't know if that's a real term or not, but traditionalist with the Fed, really just focusing in on the dual mandate.
Well, we'll keep an eye on all this fun, listeners, but there's a lot to keep an eye on out here, as it looks like the sell-off intensifying a little bit out there. Most of the major indices off over 1% now. We'll see if that is the trend that continues throughout the show as we keep rolling out to the land of the vol term structure. Again, kind of a moving target out here. Always fun to have to take snapshots of this as it's whipsawing all over the place. But right now, vol is up pretty much across the board. As we came into the start of this segment, we had the Feb future up not quite a full point, about 0.8 of a point. If I re-rack that right this minute, might be a little bit higher. March up about 0.6 of a point. If you go all the way out towards the midterm cycle, getting into that September and October timeframe, we're up a little over half a point, about 0.55, 0.6 out there. That SEP future was at pretty much exactly 22, and that OCC future's at about 22 and a quarter coming into the start of this segment. So again, we might see all that continue to firm up if this sell-off keeps intensifying out there. Mr. Meatball, sir, what's catching your eye out there in the vol futures this week?
Like I said, they really have not been reacting the way the VIX has. We're not really – I don't think we've gotten the kind of move. We certainly didn't yesterday. And the speed with which they have dumped these things when – the market has turned over has been stunning, to say the least. So, but the curve still is in contango, still looks like it thinks the market's going higher. Pretty interesting.
Does appear to be that way. Mr. Rhoads, same question for you, sir. Anything catching your eye out there in the land of VIX futures this week, sir?
So just taking a look at the term structure of the VIX curve. We got February a few weeks off, and it's at about a 1 a 1.25 point premium. I think that's about as narrow of a premium as we've seen from the front month future when we've got that much time until expiration. I believe there's about 3 weeks to go. We seem to have been doing 2 to 3 points for some time now. So maybe the volatility futures are starting to think there's just nothing that's going to create a volatility event. They're just not as braced as they seem to have been. Also, if you blink and you miss a move up in the VIX futures, which seems to happen just about every week, and that's the only opportunity to really make money being long them, you probably got a little bit of fatigue going as far as trying to benefit from some sort of volatility move, which when they do materialize, they're so short term. So I think it's definitely being reflected in the VIX curve now with February and March. March is at only a 2 point premium, and I do feel like when we've been talking about the second month, we've been talking more like closer to 3 point premium than a 2 point premium for months now. So not necessarily just the futures, but the futures relative to the index.
Yeah, how can you not have upside fatigue? I mean, if all of last year didn't give it to you, this past week, yet another example, you had a couple of hours, right, to capitalize. We tickled the 20 handle in the cash, and didn't quite get there, but got up to about a 19 handle and change. And again, that was ever so brief out there. So once again, if you're loading up on upside and you're not just glued to your screens, or you're not working really aggressive limits, it is very difficult to actually profit from any of that out there. So yeah, that was our theme last year, and at least so far, 1 month down into 2026, that still appears to be the theme. Unless, of course, today's sell-off has some legs, and then the next thing you know, we're back in north of a 20 handle regime for some time. That could certainly be the case. Maybe the metals take everything down with it. Who knows? But either way, we got some weird stuff afoot. Speaking of weird stuff afoot, seems like this last leg of the sell-off is kind of kicking VIX options back into high gear again. They were kind of languishing a little bit north of 200,000 contracts on the tape, about 229 when we kicked off the show. Coming into this segment now, almost halfway through the show, they're up to over 400,000, 415. So over 100,000 contracts going up since we started talking. So something's afoot out there in VIX land again. That ADV also starting to look a little bit healthier again. 817, it's up about 43,000 contracts from where it was this time last week. So starting to get a little bit of juice back there on the vol screens. In terms of what's open for size out there in VIX land, we are back to our pretty much standard structure of 8 to 2. We were ever so briefly 9 to 1 last week. Now that is back to 8 calls for 2 puts there in our top 10. Let's see if we can all find Waldo together. Number 10, once again, we're kicking it off with a bang. 169,000 of the March 80s. We were talking about this 80 upside earlier in the week out there, listeners. Our audience, at the end of the day, wanted to sell the 80 strike, but nonetheless, 169,000 is your number 10 spot out there today. So a lot of action. The weird thing was, usually when we see those 80s go up, it's usually part of a 1x3 or a 1x5, something like that. Didn't appear to be the other leg, unless it was so small and the ratio was so huge it was hard to find. But either way, March 80s taking the number 10 spot out there today. Number 9, our first of 2 puts in our top 10 this week, 172,000 of the Feb 18 puts. A much more reasonable put strike out there, listeners. We've been talking 15s and 15 halves forever. Let's talk some 18s. Let's get some meat on the bone there. Number 8, $1.79 of the Feb 20s, 18 puts, 20 calls. Both, you could argue, very reasonable strikes given everything that's going on out there. Number 7, $1.86 of the March 50s. Once again, we're flirting with some upside fun in March. Number 6, $1.86 of the Feb 22s. So maybe the 20s not doing it for you. Maybe the 22s are your huckleberry. Number 5, 201,000 of our old friend, the 1x4, 1x5 ratio, the 47 halves. That's the 4 or 5 leg, listeners, obviously. 201,000 of those bad boys. Number 4, if the 47 halves, for whatever reason, aren't doing it for you, 209,000 of the Feb 50s. I love that we have so much OI on those 2 strikes. It's just wild. Number 3, 210 of the Feb 16 puts. Now we're getting back to some of the cheaper puts. That's also our final put in the top 10 this week. Number 2, 380,000 of the Feb 35s. And the big dog yet again this week, 403,000 of the Feb 25s. Once again, we got some Feb near-term upside action dominating the top of the top 10 in VIX land. But let's see what else was lighting things up for size out here this week with a little bit of Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, a lot going on. I think you can probably do a whole show just today, but what's catching your eye, sir?
Yeah, and I tried to limit it a little bit. So Monday, and this is this is the trade that we always talk about, but it's being done differently now. We usually talk about people buying the 16 puts, the 17 puts, the 18 puts that are going to expire in the near future. I guess somebody has given up on that. They sold the February 4th 16 calls for $1.64 and bought the 22 calls for 44 cents. $1.20 reward if we're 16 or under. They're okay up to 17.20 on that. And if we get a volatility event over the weekend and it holds, their risk is up to 480. But I haven't seen a lot of bearish call spreads playing the settlement. It's just been buy puts. So it's interesting to see one of those instead. And I think part of it's what we keep talking about on this show is that the puts just haven't been working. A little bit later in the day on Monday with VIX at 1594, somebody sold just over 700 of the February 4th 17 puts for 82 cents. That looked like an entry. I don't think they were taking profits or anything like that. And then also on Monday with VIX right at 16, that number that we all seem to care about, we had a seller of 1,247 of the February 4th 16 puts at 28 cents, who bought the 17 puts for 82 cents. A 54 cent cost and a 46 cent reward if we're 16 or under. If you've been struggling, and we've seen that people have been struggling with those short vol trades with puts, it just looks like some alternatives are starting to pop up here.
It's so tight though. I don't know, that kind of tight spread doesn't get me too excited in VIX. Does it excite you?
It's like a binary thing.
Kind of, yes.
I've got a bunch of historical data from Kalshi, and all of their payoffs are binaries, and I'm finding arbitrages between Kalshi and the S&P market based on some of these kind of things. They don't do VIX on Kalshi yet, but this would be like a Kalshi type payoff in my mind, and maybe somebody's approaching it that way.
Are you forecasting a SIBO Kalshi partnership coming soon, sir?
No, I'm not forecasting anything. So every time I talk about SIBO like that, there's a group of people that just hammer me, saying, "Stop making up rumors about SIBO." So all right, Tuesday, we had somebody, and you brought up that 47.5 strike on Tuesday with VIX at 1624. Somebody bought about 4,000 of the February 4th 47.5 calls for 6 cents. The open interest was 34, so it definitely was an opening trade. A little bit later in the day, with VIX at 1617, somebody bought 500 of the February 25th 50 calls for 26 cents. That's another opening one. You got to wonder if they were expecting more of a react, if they knew that the Fed announcement was coming, and we kind of knew it was coming this week. If people were gearing up for maybe some sort of volatility event around that.
You got to be expecting something significant. Otherwise, if you want to throw away 6 cents 4,000 times, you could send it my way. I can put it to work for you.
And here's just, all kinds of fun. On Tuesday, about between like 9 and 10 Eastern time where I am, and VIX was between 1570 and 1610, somebody came in and bought 15,000 of the January 28th 16 puts for 20 cents. Settlement was 1643.
I was going to say, good luck to them.
I really wish we were video so everybody could see me doing a golfer's clap for that one right now.
These people they really want to just throw money away, sir.
Yeah, and it looked like an entry trade. I could understand if they were short them. Maybe they shorted them at 50 or 60, whatever. Wednesday, with VIX in the 1680 to 1690 range, somebody bought about 5,000 of the February 4th 30 calls for 15 cents. Once again, an opening trade. And then on Thursday, somebody, and I bring this one up because if I had to scratch out a living and the only thing that I could do is trade VIX products, I would probably buy weekly calls and have all kinds of freaking alarms set up. And every time we get a little move up in VIX, I try to.
I was gonna say you're living glued to your keyboard if that's your one trade.
So I saw somebody come in. VIX was at 1806. Somebody sold 2,000 of the February 4th 20 calls for 95 cents. I thought they were monetizing them until I started doing some digging, and the open interest increased by 2,000 contracts from Thursday. About 2,000 have been purchased today at 75 cents. So I think maybe they made 20 cents off the trade and they're out. I hope so for their sake. I really, if those short those and the market's acting the way that it is right now going into the weekend, I'd want to be getting out of them. I'd be thrilled that if I could get out of them with a 20-cent profit. And I got nothing from today. I mean, there's stuff, but I got nothing.
You got some cojones if you're straight selling those bad boys out there. So yeah, if you get 20 cents and you can get out before the weekend, not the worst thing.
Ouch.
Not the worst thing. And you can sleep at least over the weekend, which is an underrated thing. Out to the world of the vol markets for this week we go. Let's go out to today. Like we said, today starting to heat up. 4:31 on the tape right now. The big dog out there today. And we got mostly calls lighting up the tape out there today, so go figure. 37,000 of the Feb 19s is your big dog out there today. By the way, if you're wondering, average price right around $1.64, $1.65. So maybe you like those bad boys. Number 2, 28,000 of the Feb 20s. Number 3, 23,000 of the April 25s. So getting some duration this time. Number 4, 22,000 of the April 45s. Those are both opening. Looks like we might have some vertical action there. And number 5, 19, almost 20,000 of the Feb 16 puts. I guess they got tired of the 15s. They're going 16s. If you're wondering, those averaging around 17 cents right now. Maybe that floats your boat. Out to yesterday, a more active day, almost a million contracts. Not quite. We kissed it, though. 992 on the tape. The big dog yesterday, 53,000 of the Feb 20s. Back to that strike that seems so reasonable, but you really gotta be living that vol life if you want to monetize those. Number 2, 50,000 of the March 22s. Number 3, 50,000 as well of back to the fun, the April 80s. We did talk about those yesterday. They averaged 36 cents. Talked about them on the option block yesterday. They had traded 50,000 times. And we asked you folks, what we always ask you, you want to buy them, we want to sell them. No verticals, none of that nonsense this time. And 80% of you wanted to blast away at those 80s for 36 cents. I get it. The 80s is it's a wild strike. Number 4, 34,000 of the Feb 30s. And number 5, 33,000 of the March 35s. Wednesday, 655,000 contracts on the tape. The big dog, once again, that 47.5 strike, just lighting up the tape. 45,000 of those bad boys going up. So that means if you dig down in the strike chain a bit, you should see the other half of that, probably the 20s or 21s going up. Usually on a 1/4, maybe 1/5 ratio. Number 2, 37,000 of the March 50s. So a lot of funky upside this week. Number 3, 31,000 of the April 40s. Number 4, 30,000 of the April 23s. And number 5, 26,000 of the March 35s. Tuesday, a little over 500,000, 556 on the tape. The big dog, though, was pretty big. 92,000 of the Feb 25s. Number 2, 57,000 of the Feb 35s. Again, those are those two strikes that dominate our top 10 in the OI listeners. Number 3, 40,000 of the Feb 50s. Number 4, 24, almost 25,000 of the Feb 20s. And number 5, 17,000 of the Feb 47 halves. Once again, that uber popular strike. Monday, a little bit less than 500,000 contracts on the tape. Yet, once again, the big print was pretty big. 81,000 of the June 47 halves. So they're already setting up for June. They love this trade. They love it. They roll it and put it on like clockwork. And they're pretty aggressive about getting ahead of it. They're already getting on out to June. Number 2, 28,000 of the Feb 15 half puts. Number 3, 26,000 of the March 18 puts. Number 4, 21,000 of the the Feb 18 puts. And number 5, of the other side of that ratio, so obviously 1/4, it's 20,000 exactly of the March 21 calls. So maybe you like that bad boy. March 21, 47 half, 1/4 vertical. Looks like they did it, and they had an outlay for it. Looks like they did it for about a 75-cent roughly debit. Obviously, if you can get those for flat or even money, that's obviously preferable. But the way they did it, looks like they paid a little bit for it. Mr. Meatball, sir, obviously a lot going up out here in VIX land this week. Anything of particular interest to you, sir?
Yeah, on Tuesday, traders started building some pretty dramatic Fed positions. We saw the 25-50 spread go up 40,000 times, the 25-35 go up about 50,000 times. Buyers of the March 25-35 go up 10,000 times. So we started really on Tuesday with a little bit of follow through on Wednesday, seeing traders kind of build into this price action that we've got in the last 2 days. 1 second. Yeah, you had, I thought this was interesting. The April 23.47.5 won by 1.5 call spread from Wednesday, and then another 20,000 of the 25-35 call spreads in March. So we did see some traders starting to kind of jump in Tuesday and Wednesday ahead of the action on the 29th and today. What surprised me on the 29th, waiting for this to load up, take your time, live vol, was, there wasn't like panicked VIX buying, even though we'd had this 200-point range, right? You had 50,000 of the April 80s picked up and some March 45 calls, but not a lot of February. And I would have thought that's when they would have been jumping in, and we didn't see any of that. And then today, kind of the same story. You've got the April 25-45 and, a little bit of Feb. The 19 calls got bought, the 10,000 of the 30s, and, looks like they sold the 65 calls at a dime. So I'm surprised we haven't seen, with these moves the last couple of days, a jump into shorter dated options like regular February, and they continue to play in March and April and way out of the money. I would have thought I would have thought we would have seen more action at the money and slightly out of the money in February.
Do you agree with what we were just saying earlier on the show there, that it seems like maybe there's a little bit of, getting to what you're saying, maybe a little bit of a near-term upside fatigue because these vol pops are so short-lived? Maybe they figure if they buy a little bit of duration, they obviously don't get as much bang for their buck, but they also have a few more step-ups to the plate versus, if you had it this week, you had to monetize once again within hours, sir.
One thing that may be happening, that could be part of it, but you also, with 0DT and 1DT and all these SPX expirations, people might just be going straight into the S&P for kind of near-dated hedges. VIX kind of goes with the old tranche, right? S&P 500, we talk about this. It's now two products: stuff that expires in 2 days or less, and then everything else. VIX kind of goes along with the everything else. It's the stuff that you use when you don't see anything on the horizon, but you want protection. And it might not be the product anymore for these near-dated sell-offs. They may just be jumping straight into S&P options. And now that we're going to be getting weekly equity, you may see even more of that type of trading.
I think there could very well be something to that. The numbers out there in the SPX and all these other ones don't lie. Obviously, a lot of zero-day love out there, and that could be your more direct way to play it versus the maybe somewhat ephemeral vol trade for a lot of people out there. So, yeah, there certainly could be some of that as well.
I mean, think about the switch in volume in the S&P. I know we're primarily a vol show, but before they listed S&P dailies, the average volume on the S&P was like what 1.2, 1.4, something like that.
Yeah, if you got over 1 million on SPX on a day, you're like, oh, this is a hot day.
Yeah, and then on the really, really crazy days, the 2020s, maybe we got to 2 million, and now daily it's doing 4.2, 4.3. SIBO's not going to like this, but I actually think the multi-listing of these individual equities, if there is, the winners are going to be the individual exchanges, right? NASDAQ, the Intercontinental Exchange. I'm low to call it ICE.
ICE.
But because that's such a flashpoint. But the Intercontinental Exchange and even MIAX are going to be clear winners here. I want to kind of see ferret out, how do these affect trading in SPX? Like SPY really hasn't, Qs really haven't, but maybe these individual equities do kind of mess with that a little bit, or it might just be additive and SIBO continues its march toward a curbillion.
Unless there's a whole bunch of intraday dispersion springing up, which could very well be. You're right. I do think it's probably going to cannibalize some of that. If you're going to go straight to the source, usually, if you think Tesla's driving the ball today, or Meta, whatever it is, you're probably going to go straight to the source. But we'll wait and see. Next week is the hot week, listeners. Are you planning to dive into all those? I know a lot of our pro members are already talking about trading on the 2nd and the 4th. They've already got some in already. So it's going to be a different game this time next week. Is it a different game out there in the land of inverse and levered vol? Well, SVIX coming back to earth a little bit, right around 22.5 right now. Puts it down about 1.5 points from where it was on our last show. Obviously, it dipped a little lower intra-week. So I know some of you out there have been lurking, waiting for a nice entry point to get back into SVIX. Maybe this is your level. I know a lot of you are probably looking for a wee bit lower. I've been talking about hitting on some puts down there. Not much going on volume-wise, so I guess a lot of you folks are still keeping your powder dry. Only 1,500 contracts going up in SVIX already today on a pretty active day. I guess an ADV of 4,500, which is dropping back down. I don't know what it's going to take to really gin up some paper in SVIX, but clearly today is not the day. UVIX at a 6 even, puts it up close to 3/4 of a point from where it was this time last week. UVIX putting up some numbers, though. 40,000 contracts already. The ADV is only 41,000, so they're pretty much at their ADV. Mr. Rhoads, sir, I know you've been slinging a lot of inverse and or levered vol. Well, maybe less so on the inverse these days, but you're still up to your weekly levered weekend fund. There we go. So what's catching your eye out there this week, sir?
Well, I actually, because I'm a rule breaker. I actually went ahead and bought the UVIX just because for the weekend, because the way the market's acting right now.
You might get a bit of a discount if you buy it now. I was thinking the same thing versus later today.
Honestly, I've done that a few times, and it ends up netting out to zero. Sometimes it works, sometimes it doesn't, but market feels very nervous this afternoon. An inverse vol is a great way to play that, especially just for an overnight one or two day moves. And I'm at a minimum position on SVIX right now. I'm really hoping for a volatility event to put that back on for a long term. Can I deviate on you for 30 seconds?
You can deviate for a full minute.
You are an expert deviator. We want to hear your deviations.
Well, we were talking about the June 47.5 calls, or you guys brought them up.
Yes.
That's a diagonal spread. They sold they sold 80,000 of the February 55 calls at 62 cents and bought 80,000 of the June 47.5 calls for $1.21. The trade's about a month old, but my feeling is probably when we get close to February expiration, I'm going to be looking for an 80,000 lot in some March options.
Do you like that trade? Russell?
No, I feel like you're going to lose the $1.21 on the Februaries. I'm sorry, you're going to lose the $1.21 on the Junes. You'll make 62 cents off of the Februaries. If you sell March somewhere and make another 60 cents, you're at break even. And then you got April and May and June to sell against those long options as well. So
the whole point of that position is to protect you. And if we get I get it's some sort of weird carry trade, probably.
Yeah.
But if we get a major move, that position has real problems.
It can, having the 47.5 strike as the long one and the 55 strike, having a higher strike as the short one. I mean, I don't know if that's 7.5 points. And I was digging this up when you guys were talking about other stuff, because I knew there was something going on with that 47.5. So this is fresh thinking as well. But, they did that. They sold the Februaries. They did that back in December. Maybe they sell Aprils and then maybe they sell Junes. But it'll be interesting to get an idea of what's going on. I got to keep a close eye on those 80,000 February.
You think this is more of a carry trade that has maybe a little bit of upside help than an actual hedge?
I think it's totally a carry trade. Okay. And it's set up that if we do get a volatility event, that it won't both be so awful that they can't keep the position.
Okay.
You know what I mean?
Yeah.
That's interesting, because in the past, those 47.5s have all been linked to that ratio, which is, in fact, that's how it went up again on Wednesday. It went up April 23, 47.5 on a ratio there. You're saying they did it against Feb doubles?
Well, this was back in December, on December 10th. This was a spread trade that was put together. Again, selling the February 55s and buying the June 47.5s. And they did it. They got 62 cents when they sold. They paid $1.21 when they bought. They rolled this thing with a couple of months to go. Roll it to the Aprils, and they'd be at about break even, and then maybe they make money off of the other ones. But they're also guarded. There is some protection. And what I'll do is I've got an Excel spreadsheet where I can put assumptions in with implied volatility and everything if we get a big move, and I can also put in different assumptions around where the curve is, and kind of get an idea as to how bad this thing would be. But VIX traders never cease to amaze us.
That does add a different.
We used to have 3 or 4 big old whale type trades that would come in every once in a while. And there's even a poster on my office at IU showing Mr. 50 Cent and that ratio spread that we saw. But they continue to get all innovated on a market that's been around for about 20 years or so.
I kind of thought there had to be another missing leg of that ratio spread. I didn't think it was the Feb doubles, so that is certainly an interesting.
I was surprised
wrinkle.
to find it too. That's why I made you deviate.
All right, really quickly, anything on SVIX or UVIX this week, sir?
No, got into UVIX early. I've got a 25% of a normal position in SVIX right now because I want to add to it.
Mr. Meatball, you have been running that SVIX newsletter for a while. It's been an interesting market in SVIX of late. Anything catching your eye in the world of either SVIX or UVIX, sir?
Not really. Just SVIX up until last 2 days, perfect for selling covered calls, and that's been about it. UVIX, your strategy might work this weekend, Russell, if there's some follow through. But again, the pattern continues to be over the last year, we've actually gotten the moves on Thursdays and Fridays, and then we come in on Mondays and everything's rosy again. I'm wondering if you could do like a Wednesday night, Friday night trade on this thing.
I could do that. I've thought about that. I've because there are certain days where being short the SPX straddles just doesn't work, and certain days where it does work. And I actually kind of translated that in my mind to, maybe when it's not working, those are good days to own UVIX, as long as it's not working because of a downside move. But that did have me thinking like that a bit.
All right, let's run through some of the rest of our vol universe here, listeners. UVXY 37.65 up pretty much exactly 3 points on the week, putting up 27,000 contracts. UVXY usually doesn't have a hard time getting out of its own way volume-wise, aside from the time when it does its reverse splits, but it's starting to regain some of that ADV, which is at 35,000. Looks like it's going to hit that today. And then VXX 27.65, up about 1.5 points from last week, putting up 33,000 contracts already. The ADV is 44,000. That's unched. Most of these ADVs are pretty much unched on the week, which is interesting. Seems like VXX probably going to hit that today as well, as it is time for us to hit the final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Let's go on in to the crystal ball, listeners. As we're coming into the end of the show, by the way, let's do a little bit of an update. Seems like the sell-off was intensifying earlier in the show. Now it seems like we're mitigating a little bit. S&P off about 0.6%, Dow off 0.2%, NASDAQ back below that 1% threshold, 0.86. VIX cash, though, continuing to firm up, which is kind of interesting out here. We're north of an 18 handle, right about showing at 1831 here on my screens, which is kind of juicy. No, we had no 18 handles. I was at a 16.15, so no joy for me. Russell was at a 1520, and Mr. Meatball was at his palindromic 1441. Let's go in here really quickly. Even if I get it at about a 1760, looks like I'm getting a weird gulf on my my VIX numbers here. Let's go. Even if it's a 1760, we're still all no 17 handles, no 18 handle this week, listeners. We were in a fairly tight range. Unfortunately, no joy, unlike Dr. VIX, who hit it out of the park last week with his first crystal ball of the year. So since you won last week, Mr. Rhoads, I guess you get the dubious honor of going first. What does Gretchen feel?
Gretchen is saying 1765.
Ooh, 1765. Almost a historically appropriate number. Almost. Can't really think of a lot.
I can change it if we want.
Yeah.
I do have Gretchen.
Do you have the power? Do you have the power to overwrite Gretchen? I don't know.
Yeah.
She might get mad at you.
She can try to do what she wants, but I have the ultimate say. I am God of Gretchen.
You have programmed her to not harm humans. At least that's what you think. But you must sleep, sir. All right, Mr. Meatball, you want to go next or you want to go last?
You can. I'll yield to you, Mr. Longo.
I will go next. I was obviously not in the right ballpark last week with my 16 handle, but you know what? I'm feeling a little bit juicier out here this week. So I'm going to say a little bit frothier. Why not? I'm going to say not that dissimilar from where we're hanging out right now. I'm going to say a little juice. 1835. Also not really a historically banger year, but a fun one nonetheless. Mr. Meatball, where are we going in palindromic land this week? Are we going 1771? Are we going 1661? Are we going, dare I say it, 2002? What are we doing?
Yeah, so we've got two people in the 17s.
I'm at an 18. I'm at 1835.
Oh, you're an 18.
I put that under
17. You. So, I'm going to say 1661. That is your level.
That is, that's not a terrible level either. I'm sure something historically appropriate happened that year. Were we in the middle of the tulip crisis? I don't know. I'm going to say we were, because why not? So a tulip appropriate 1661. And that is going to do it for us on Vol Views this week. Listeners, if you're hanging out in the pro, I see we got some 18 handles coming in our pro chat as well. Remember, you can play along if you're listening after the fact as well. Just try to get them in today so it's fair. And if you're within a tenth of a point, you too can win fun, fabulous prizes. If you're hanging out in the pro, just hang out. We'll be back right after this show with the official after party of Volatility Views, known as Options Oddities. And yeah, there's some weird stuff afoot out there today, so it should be a fun one. If you want to check all that out, you know where to go, theoptionsinsider.com/pro. And of course, while you're checking things out online, check out our friends over there at Tasty Trade, tastytrade.com/podcast, the place to go. They really like you Vol Views listeners. You folks are the creme de la creme for all the brokerage firms out there. They all want the Vol Views audience. So check out what Tasty Trade has cooking for you folks here in the new year. And Mr. Rhoads, if folks want to check out what you have cooking, where should they go? What should they do?
Follow me on Twitter. In just a few minutes, I'll tweet out a link to that video I did in response to Andrew talking about just how different 2025 felt and how that shows up in the numbers. Got to mention that last week at the very end, so I'm mentioning it.
Oh, you have a rebuttal to Andrew? You're going to call him an ignorant, ignorant you know what?
It confirmed what he was saying.
Oh, that's no fun. I wanted a heated back and forth.
I know.
In the meantime, listeners, you know where to find them. 2 S's, 2 L's, RHOADS. If you got to the drunk Tampa weatherman, you've gone too far. Dial it back 1. and you get to Mr. Rhoads. And Mr. Meatball, sir, if they want to see all of your glorious, very loud goodness online, where should they go? What should they do?
Yeah, follow me on Twitter at Option Pit. I'm always going to give you, it's always worth your time.
That your new tagline, always worth your time. Optionpit.com.
Yes.
And especially if it's that video of Andrew pulling the boulder out of the ground, then it's worth 10x your time. That's just gold.
Yes.
Check it out at optionpit.com to learn more. Got to get on out of here. Back again instantaneously in your ear holes with a little bit of the old options oddities. Then back again after the closing bell to break down what's shaping up to be a pretty wild day out there with a little bit of the hot options report. Yet another reason why you should be listening to the full network. And then back again next week, kicking it off on Trivia Monday all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.